Hi everyone, this is the 2026 Mentorship Program Lecture 20. And in this lecture, I will be trading live, I'll be day trading live, trading the New York section. So in this lecture, it's going to be a little bit boring because we're going to talk about my daily buys, what have been my daily perspective throughout London section, and what I'm currently looking at in price, and what I will be looking at in price if price were to trade to my draw on liquidity. So let's move to the chart. Let me set up the chart. Um, so I've been giving you guys a little commentary on the Telegram group, trying to update you guys on what I'm currently looking at in price. We're going to go over the weekly time frame so that you guys can know what I'm currently looking at. And if price were to trade to that direction, what I will be doing. So let's move to the chart. So I'm on a daily time frame of the dollar index. I posted an image talking about price running out the weekly high. Here's the weekly time frame. Price took out the buy side liquidity. I told you guys that the general trend going in this week is that I'm anticipating lower prices on the weekly time frame. But the reason I'm not going to be taking any setup is because the daily trend is not aligned with the idea. If the daily trend were to align, I would have been anticipating lower prices. But as long as the daily trend is not price to align itself, and to see a good alignment in the weekly and the daily before taking any weekly expansion trades. You can see the price took out the buy side liquidity. After the run on the buy side liquidity, price trade above the swing high. This makes it an shifting structure. Price did a shift in structure on the weekly time frame. And when you look at it from a daily time frame perspective, you can see that here's a trend using the inversion fair value gap as a support. They trade higher to run the buy side liquidity. That was the main reason why I'm not actually looking at price trading lower as a confirmation to look for an entry. I need to wait for the fair value gap to fill in supporting price before actually taking a sell. But you can see the fair value gap price used it as a support, traded higher. Monday filled in the weekly fair value gap. Tuesday took out the buy side liquidity. And I told you guys that I'm currently going to be putting more attention into the daily time frame, looking for a possible trend continuation trading higher, which I explained in the Telegram group. That I'm looking at price trading higher for a continuation. So looking at the daily time frame, my current draw on liquidity that I'm currently looking at is price running the previous day high. In the previous lecture, I posted a lecture talking about how to trade a daily trade plan. So the daily trade plan, one of the key concepts in the daily trade plan is learning how to implement multiple time frame, how to use each and every time frame, and what are you looking at on each and every time frame. I told you guys that the daily will be used in understanding the on liquidity and the overall draw on liquidity. Price already took out the buy side liquidity. There might be a possible retracement. But looking at it from a candlestick continuation, saying that Tuesday closed above Monday's high, there's a likelihood of price retracing to run Tuesday's high. And that is the current draw on liquidity I'm seeing at the current price beta. So the current draw on liquidity is a run on the previous day high. Moving to the 4 hour time frame, moving to the 4 hour time frame. Now on the 4 hour trend, we're looking at the trend of the 4 hour if it's aligned with the daily perspective. Here's the daily fair value gap. Sorry, let me move this weekly fair value gap aside. Here's the my draw on liquidity. From the swing low to the swing high, price did a retracement to a 4 hour fair value gap. Now, the only reason I will be looking for a continuation in price trading higher is for price to support from the 4 hour fair value gap. If price were to fail to support from the 4 hour fair value gap, then I will be looking for a continuation to the daily fair value gap. If this 4 hour fair value gap were to fail, now regardless of what the 1 hour is actually doing, I'm going to put most of my focus on the 4 hour fair value gap as a support. It's going to be the last line of support. If price was to fill in this fair value gap, I wouldn't be looking for any buy for price to run the previous day high. So going into the New York section, I'm going to look at the swing low, 1 hour shifting structure, retracement, respected the other block. Currently price is trading lower. Looking at price trading lower, draw on liquidity is to see that price is retracing to the daily fair value gap. The only reason I'm going to be looking at the buy going to the shifting structure, if we can't find any 15-minute shifting structure, then there's not going to be any setup today. Now, the reason I'm going to stand to a 4 hour trend for price to respect a 4 hour point of interest, then regardless of what the 1 hour is doing, based on the price data, based on my back testing, the 4 hour point of interest hence to support or resist in price more than the 1 hour. But whenever both are in line, lead to a great trend and makes it a high probability. But currently, the 1 hour is currently indicating a sell, and the 4 hour is actually indicating a buy, still in an uptrend. And if price were to support from the 4 hour fair value gap, I will be anticipating higher prices. But if we were to trade through the daily fair value, through the 4 hour fair value gap and trades to the daily fair value gap, then I will be looking for a 1 hour shifting structure leading to higher prices to the previous day high. This is my current daily draw on liquidity. It's either price support from the 4 hour fair value gap or support from the daily fair value gap. So let's move to the 15-minute time frame. Currently on the 15-minute time frame, New York section just opened. I think we had 17 minutes since the opening of the New York section. And currently looking at price, there isn't any 15-minute shift in structure, which you're going to be paying attention to see how price is reacting to the 4 hour fair value gap. So we're going to sit back and see what price is actually doing. And watch to see how price will be trading. So if you haven't joined the Telegram group, if you're not in a Telegram group, try to be involved in a Telegram group because I'm going to be having a frequent day trading live. I'll be day trading live frequently going in. I think for the next 3 months, I'm not sure how long I will do it, but I know in the next 3 months I will be very active day trading on the dollar index and Euro USD. Now, I normally do my overall idea from the dollar index. Then I look at the correlation between the dollar and Euro USD to actually take the trade on Euro USD. So looking at this price action, I will move to Euro USD to look at Euro USD price data. On Euro USD, price took out swing low. After the run on the swing low on the weekly time frame, so it gets there might be a likelihood of a continuation. And if you're looking to take advantage of the continuation, it should be from the daily time frame. Now, there's a daily fair value gap, which price haven't retraced to the daily fair value gap. Based on candlestick continuation, if Wednesday were to trade lower, the drawn liquidity should be the previous day low. Previous day low as our drawn liquidity, 4-hour trend to see if price is actually respecting the idea of trading lower. And looking at the 4-hour, price is still in on a 4-hour fair value gap. You can see it's very similar to the dollar index. That was the reason I look at both currency. Only take trades when they are fully aligned. The 4-hour, you can see how price traded deep into the 4-hour fair value gap, which the idea is still the same. If price were to trade above the 4-hour fair value gap, there's a more likelihood of a retracement to the daily fair value gap. Now, I wouldn't be taking advantage of the retracement unless there's a candle close. If there's a candle close leading to a retracement, then I will be taking advantage of it. But I want to stick to a clear perspective or a clear bias going in this live section, which is to anticipate lower prices to trade lower to the previous day low. I price to trade against it. I already gave you guys that. As soon as there's a fill and the 4-hour fair value gap, I wouldn't be looking for any sell in anticipating lower prices. But as long as price is still within the range of the 4-hour fair value gap, I'm anticipating lower prices. I wanted to bring this up that it doesn't matter if you're a day trader or you take intraday trades, having a setup every day more is more likely not going to happen. Most, I think, the only trade I've taken advantage this week was a trade I took advantage of yesterday on the dollar, which I took a trade directly from Euro USD, and it was a sell trade which played out. That was the only trade I've taken so far this week. Most time I take 1 or 2 trades a week on a day trading plan. But there are some times where I do take 3 trades, which not always a win. Some are losses, some are win. But as long as you have a good risk to reward, you can still come out with a profit at the end of the month. But having a trade every day is more likely not. And if you have a trade setup that gives you a trade every day, I can't say there's a trade setup that gives a trade every day or depending on a good condition in price because every day is not a good condition in price. There are some days where price is going to consolidate more often than a good expansion during both sections. So I look for those good times where the daily is ready to expand and there's a lot of volatility in price to deliver to my targets. Those are the days I do take advantage of a daily trade setup. So most time in a week, I only trade 3 days or minimum 2 days a week. I don't actually trade the whole 5 days a week. So I wanted to bring that out. So if I'm not going to have a live lecture or having a live day trading section, it means that I'm not actually trading that day because there's no clear bias to where I'm actually looking at. And price is I'm actually anticipating a consolidation or a realignment to my general idea in price. The ideas is still the same on the 15 minutes. Looking for that 15-minute shift in structure, then I will be taking advantage of the trade. But if there's going to be a support in price trading higher to fill in the 4-hour fair value gap, then I wouldn't be anticipating lower prices. Now, there's a high impact news today. And move to Forex Factory. So for those that have been going through the Forex Factory, you know that this is the first week of March, which is NFP week. So this is the first week of the month, which is the NFP week, and on Friday we have NFP. But today, Wednesday, we have non-farm employment change and we have ISMS service PMI. We have a PMI announcement at 10 a.m. and we have non-farm employment change at 8:15 a.m., which is quite close. I think we have a few minutes to the first high impact news, which is the non-farm employment change. So we're going to see that price action is going to react in the current price data, and we're going to be determining how we're taking advantage of it. We're still going to stick to the general idea. Whenever you day trading or live trading, have a predefined bias, a predefined idea before actually waiting or not looking at price, waiting for price to react before actually taking advantage of any setup. You need to wait for this right moment. So we are waiting for the shift in structure to take advantage of the setup if price were to trade higher to run the previous day high. One of the reasons why I haven't been doing a live trading section is because it's most likely going to be boring because most time we're going to spend looking at the charts, not taking any trade, just waiting to see if what we anticipated is actually going to happen and price is going to align with the buyers if we're actually taking the trade. So that was the reason I noticed that if you want to keep it a little bit interesting, you need to talk about a lot of stories on other topics. So that was one of the main reasons I don't normally do live trading section. So, but the reason is that I wanted traders in the 2026 mentorship program to understand how to day trade well because I've been talking about the weekly expansion trades a lot, and most traders are really, really interested in learning how to day trade, which I told you guys that to day trade takes a lot of thinking to day trade. It takes a lot of time and patience, mostly because you're going to be looking at the charts, staring at the charts, not having any other activity to do during those specific section that you do trade. So most time you're going to spend looking at the charts. So that was one of the reasons I told you guys that I'm going to do it for a while, but I'm not sure how long I will be doing it. But it's most likely going to reach a month, 3 month time. I will see how the performance have been live trading on a specific section. I will be picking between the London and the New York, is depending on how prices align with my draw on liquidity. If I'm anticipating the setup to be on the London section, then I will be having an early live trading section. So the live trading section should be around, I can say 7 a.m. Now, whatever time I'm mentioning in this video is going to be Eastern Standard Time. So be aware of that. So it's most likely going to be 7 a.m. and I will be live 7 a.m. when I have a clear perspective in price during the London section. All will be announced on a specific time. I will be live on the YouTube channel. It will be announced on the Telegram group. So make sure you're in the Telegram group and you're following up on what price is actually doing. So on the current candle, we can see that the current candle is not trading lower, which is quite close and running out this high. Where to zoom closer and move this fair value gap to bit. We can see that the candle is trading above, coming close and running out this high, which might lead to a shift in structure. We still have, I think, minimum a minute before the close of this candle. So we'll see how price trade. So to be fully updated on what I'm actually doing, remember, you just need to be a member in the group to have full market update on what I'm actually looking at. And if you have any question, you can send a question at the Telegram group. I'm not going to be answering any question on the YouTube comment section. If you have any question to ask or you want me to look at any currency, you can join the group, send your message on the group, then I will be looking at the currency. Now, I don't know how long I will be live. So there's a message in my Telegram DM. Someone DM me directly asking how long will I be live. Now, I don't know how long I'll be live. It's mostly depending on what price is doing. If price is still aligned with my idea and I say that there's a possibility of price trading close to my entry or trading to the idea, then I will be live on a minimum of around an hour. And anytime I'm going to be live, it's going to be on a minimum of an hour. Now, will I stay up to 2 hours or 3 hours? Is dependent on the price action. But the bare minimum is going to be an hour. I will be live an hour plus. Then I can tell you guys what I'm actually going to be looking at throughout the section. Then I might go offline at that time. Because clearly, you guys already know my idea that I'm anticipating higher prices if price were to respect the 4-hour fair value gap. So I think that is pretty clear. So if you have any question, you can ask the question directly on the Telegram group and I will be answering your question live. Let's move to the 5 minutes. The 5 minutes, there isn't any shift in structure so far on the 5 minutes. Price only took out the swing low, retrace. Looking at this order block led to this retracement. And if price were to run this high, there's a 5 minute internal shift and possible trend trading higher. But I will stay to the 15 minutes for an entry. Most times, if you have watched the previous lecture, I told you guys that the only time I'm using the 5 minutes for an entry is when I'm looking at a 1 hour point of interest for price to support or resist from. But just to have more topic to talk about, we can look at the 5 minute to what is currently the draw on liquidity. And at the same time, I might go into scalping a little bit. Now, the scalping is going to be on the 1 minute just to play around. and give you guys my own personal perspective on the 1 minute, but it's not going to be for trading purposes. So make sure you're not actually on the other side taking the trades of whatever scalping trade I'm talking about, because I'm personally not going to be entering the trade. I'm only going to be showing you guys what I'm actually looking at 1 minute doing, just to make the lesson interesting and the live section interesting. You can see price took at the high, took at the swing high. On the 5 minute, there's a shift in structure. The same goes to the 15 minutes, the shift in structure. Now I'll be looking at the fair value gap. If there's going to be any fair value gap, that should be an area I'll be looking for an entry if there's a fair value gap. Now let's look at Euro USD, same price action, traded lower, came close. If there's a continuation trading lower, then I will be anticipating lower prices. So I'll mute my mic in the next 10 minutes or so. I need to get something done, but I'll be back in the next 10 minutes. Just look at the price action. I will leave the chat like this, but my mic will be mute. Okay. Looking at this price action, to the retracement that it can do. Now, this might be a 15-minute order block. The fact the price took at the high, did the retracement to the other block. Now, it's not an entry, it's not an entry in my own perspective, but we can still look at it if price were to support and create a high, this might lead to a continuation in price trading higher. Now, to make the live trading section a little bit interesting, I will be anticipating price on a 5 minute time frame and a 1 minute time frame just to make it a little bit interesting. Now, I did this on the 2025 mentorship program to show you guys how I determine my daily bias. That the idea is that we're going to trade the 5 minutes like a weekly candle, like a weekly time frame, and trade the 1 minute like a daily candle. And we're going to be looking at price using both time frame to determine what will price be doing on a lower time frame perspective. Now, this is how I determine my bias. Just a quick example on how I determined my bias. And we're going to talk about it just to make it a little bit interesting, but we're going to stick to the general idea of what we're actually looking at in price. So I'm going to do it like this and make it full screen. Let's make it a full screen and like this. Here's going to be the 1 minute time frame. We're going to be looking at the 1 minute time frame. Now, I'm only doing this just to make the live section a little bit interesting. And here it's going to be the 5 minutes. Now, the 5 minutes is going to represent the weekly time frame, and the 1 minute is going to represent the daily time frame. Now, because we're going to have a quick result, so that's the reason I'm using it, so that you guys could understand how you can use the idea. So let's do like this, and let's save this so that we can see the same price data here. Okay, on the 5 minutes, price is actually supporting from a 5 minute fair value gap. On the 1 minute time frame, price respected its traded high but did not go above this high. So there's no 1 minute shift per se. So it's most likely going to take out this swing low first, and maybe we can see a retracement. But currently, the alignment between both time frames is not actually fully aligned. Now, there's a delay in my own price data to yours. I think the software I'm using for the live stream, there's a delay. So if you had to look at your own charts, there might be you looking at further price action before me. Now, the reason is that I'm still looking at live data, just like you, but the delay is between the streaming app and to the YouTube software. If there's a run on this high, leading to a shift, then we can anticipate price to run the buy side liquidity. trade above this fair value gap. Here's a jump in price in really not this high. So the drawn liquidity, both time frame is now fully aligned, and the drawn liquidity is to run the buy side liquidity. On the daily time frame, you'll be looking at areas where price will use as a support in trading higher to run the buy side liquidity. These are the times where both time frame are fully aligned. Now, taking an advantage of the setup from price trading above the daily, or we can is the 1 minute fair value gap, but during the time price trade above the 1 minute fair value gap, taking any setup to run the swing high is going to be a low probability setup. But at the same time, it's still aligned with the idea. The fact that price did not use the fair value gap as an inversion fair value gap to trade lower to run the swing low, the fact that it's trading above the fair value gap, there's a chances in price running out this high, or is a low probability setup. But after the run on the high, it's a high probability setup to look at price using this fair value gap as a support to run the buy side liquidity. Now, here's the retracement to a 1 hour point of interest. On your lower time frame, these are the times for you to anticipate those lower time frame shifts in trading higher to run the buy side liquidity. Now, looking at this candle's close, the 1 minute candle close, here is a high chances in the next candle to represent as an upwards candle. The fact the price took at this candle's low, respected the fair value gap, and closed back into the range, leaving a candle like this, high probability up close candle. So price took out the buy side liquidity, and looking at it, I explain the two levels of risks. Here is a low risk, sorry, this is a high risk chances, looking for those setup at the spot before the run on the high. But after the run on the high, this is a low risk advantage, leading to a discount, using that discount point of interest as support to trade higher. And I told you guys that whenever you see a candle like this from a point of interest, running out the previous candle, closing like this, there's a high chances of the next candle to expand higher. On the 5 minute time frame, clearly you can see the price is shifting structure to the upside. Look at the 15-minute time frame. You can see the support from the other block. I talked about the 15-minute other block that I'm not going to look at it as an entry level for the overall idea, but if price were to trade higher, they should serve as a support. And to look at it from a 5 minute perspective, you can see how price used it to trade higher. So this is how you determine your bias. If you were to look at this same price action from the weekly and the daily time frame, these are areas where to take advantage of it. Now, on the daily time frame, after you run on the buy side liquidity and you want to trade the continuation, pay attention to the daily point of interest, which is the fair value gap, the other block. Here's another block. Look at how prices were expecting it and pay attention to the lower time frame. Day traders, these are times for you to anticipate higher prices. And because you don't know how far will trade, how far will price trade higher, you're most likely going to look at price to run a daily swing high as your target, which should be this high. So I'm just trying to use the lower time frame to show you guys how to determine bias and how to take advantage of trades idea. So learn it, practice with the 5 minutes, just like how I'm doing. Practice on the 5 minutes, look at how it's trading, learn how to implement it on a higher time frame perspective. Now you can still do this with daily and the 4 hour. I can do it with the 1 hour and the 5 minutes. Just for a quick result, that's the reason I'm using a 5 minute and a 1 minute. Now I will explain the specific. I did explain the specific on the 2026 mentorship program and on the 2025 mentorship program why using those time frame are very important. If you are looking to take trade, if you're looking at the daily as a draw on liquidity, as where you determine your bias, you need to have a time frame closer to that time frame for a confirmation to see those internal trend within that bias. So if you were to take a trade from a weekly time frame, from a weekly bias, you need the daily time frame to look at this internal trend. The same goes to a daily trend. If you were to trade on a daily time frame, you're looking at the daily as your bias time frame. At the same time, look at the 4 hour. Look at those internal trend that are closer to the daily trend. Look at how prices were expecting a point of interest on those time frames, and you will identify the move beforehand, mostly before the actual expansion. Which, looking at this example I just used, look at how price traded above the fair value gap. Impulsive candle coming close to the buy side liquidity. I told you guys any trade to the buy side liquidity, which is the swing high, would be a low probability setup. But as soon as price trades above the high, it makes it a high probability setup to anticipate a continuation to the buy side liquidity. Now, looking at the 5 minutes, the 5 minute candle closed. Let's move this buy side liquidity out. Let's take this out. Let me take this out. The 5 minute candle closed. There's a fair value gap between both candle. Here's the fair value gap. Make this blue. Okay. Here's the fair value gap. And price traded through the fair value gap at the same time. Here's the 5 minutes order block. Now I'm measuring the mid-range of the other block because if price were to trade below the mid-range, price is most likely going to run the swing low. I've seen it multiple times and I know about it. Trade below the mid-range of the body of the candle, more likelihood of price trading to the swing low. Currently on the 1 minute, you can see that price at the zero point 0.5 level. A trade below the zero point 0.5 level, there will be a retracement to run the swing low, which there's a trade below the 5 minutes. Now you can look for a continuation trading lower to run the swing low. That should be the current draw on liquidity. Could be the sell side liquidity on how price will be trading lower. And areas for you to pay attention to should be the 5 minute fair value gap, which is this fair value gap. At the same time, daily points of interest, which here there's a fair value gap, a daily fair value gap. I'm going to make it green. Let's make this light green. Now, regardless of what we're actually doing at the same time, we're still looking at the 15 minutes for our actual daily setup. This, what I'm doing currently now is just to make the live section interesting, which I normally do just to practice bias. So currently, after price respected the other block, just a run on the swing high, and you can see price actually consolidating. I'll look at what price will do. But currently, on the 1 minute, I'm looking for that lower prices to run the sell side liquidity. Came back to the zero point 0.5 level, rejected one more time, coming close to the sell side liquidity. So on a daily perspective, you'll be anticipating a down close candle to price run the sell side liquidity if you were to look at it from a higher time frame perspective on a daily bias. So we can see first day you sold, second day you're still selling to run the sell side liquidity. I don't have any magic on how I determine my bias. This is what I do on a higher time frame perspective. Looking at the weekly, looking at the daily. This is what I do on a daily. This is one of my daily routine on how I determine my bias. Now, price took out the sell side liquidity. It run on the sell side liquidity. Now let's take this off. I did explain on how price traded below the zero point 0.5 level and to run the sell side liquidity. Let's take this. Okay, this is still a point of interest is still important. For it to take any point of interest off should be this because around the sell side liquidity is indicating that if there's a fair value gap, there's a shift in structure. Now, whenever price takes out the sell side liquidity, the only time frame for you to focus on, see there's a candle close, is price trading below the sell side liquidity. The time frame for you to focus on should be the daily time frame, which in this example is the 1 minute time frame. Look at the 1 minute time frame. As long as there is a previous candle closing below, you look for that continuation and running out the previous candle's low. Now, for a trend continuation, for those that don't know about CRT, I talked about CRT running out the previous candle's low as long as the previous candle closed below the recent candle. So you can see close below, close below, close below. Now, it's not going to be 100% right. There's more cases price will use it to form a swing low or retracing to a daily point of interest. But if you were to look at a trend continuation, this is one of the key signal in showing you that price will be trading lower. On the 1 minute retracement, now there's a 5 minute close on the candle running out the sell side liquidity, and the 1 minute is going to be our focus because the 5 minute is not actually telling us much. The idea is that will the 1 minute keep on trading lower to run the sell side liquidity below? These are the times where you're going to pay attention to how price is trading on on the daily, which is on the 1 minute. Respected the 1 minute fair value gap, traded low as a down close candle, the next candle, drawn liquidity to run a swing low, and watch how price is going to be trading. Remember, our current drawn liquidity is a sell side liquidity from the daily perspective. Is the price to trade lower, and you can see how the candles are closing below, still anticipating lower prices to run the sell side. Now we have 3 minutes before the 5 minute candle close. So let's look at what price will be doing going in. So we're currently at 8:07. You can see the time. We're currently at 8:07, and we have non-farm employment change at 8:15. So you guys take note and we'll look at how price will react during that time. So we have 2 minutes before the 5 minute candle will be closing. And on the 1 minute, on a trend continuation, price haven't run out the previous candle's low, but we can see that, okay, price did run out the candle but did a retracement. Now, would I be looking at this candle as a continuation trading lower? Now, it depends on the 4 hour, but I can look at the 4 hour because we're using a 1 minute. I can go lower more than this. But I will wait for a real alignment, which if the candle were to close as a down close candle, then I will be anticipating the next candle to do the same to run the previous candle's low. That was how I would go about seeing a little retracement and looking at the candle trading lower without retracing to a 1 minute point of interest. But the idea is still the same. You're just looking at the right timing for you to go in anticipating a strong bias in trading lower or higher. Look at the previous candle's low, already close to the sell side liquidity. Look at this price action. If you were to take a sell on a daily bias, you can see every day you're just looking for a continuation in that trend because the previous candle closed below the recent candle. Clear indication of a continuation. And you can see the continuation trading lower in running out the sell side liquidity. If you have noticed that I'm telling you guys what should be your thought process on every given time in price. I explained when I will be waiting, when I will be taking advantage of a setup, and that way you can learn on how to develop a daily bias. Price took out the sell side liquidity. Now, the first candle on the weekly perspective, which is the 5 minutes, here's the 5 minute candle close after running out the sell side liquidity. A retracement to the 5 minutes fair value gap. It's not that likely if I were to say, but I will be looking at a continuation to run the previous 5 minute candles low. That should be my draw on liquidity on the next 5 minute candle to run the swing low. So let's move this out the way. On the 1 minute, I'm going to look at the 1 minute point of interest to serve as a resistance to trade lower. Now, remember, you're not trying to be right all the time. You're just looking at what price did and to see how to make sense of what price is actually doing. So, probably to respect the 1 minute point of interest, I will be anticipating lower prices as long as the candle closed below the previous candle. I will anticipate price to run the candle swing low because that might lead to a continuation. Now, I already explained the thought process on why I'm looking at price to run the candle. So during the 5 minutes of this candle, I'm anticipating lower prices. Now, we have 2 minutes before the news. We'll look at how price reacts during the news. So I've been live an hour plus now, which have been the general promise that if able to go live, I will be live an hour plus, which is the bare minimum of time I will be live explaining price to you guys. And looking at this daily candle, you can see how price is still in the daily fair value gap, which is the 1 minute fair value gap. Sorry, I should stop saying daily. I should just say the time frame correctly. Price have stayed inside the 1 minute fair value gap. There's no trade in filling in the fair value gap. A good down close candle outside the fair value gap should indicate a run on the swing low. But a fill of the fair value gap should indicate a continuation to the next fair value gap to see if price will use it as a resistance to trade lower. But if the next 5 minute candle were to close, then the point of interest should be me looking at those continuation from the 5 minute time frame, which once we get to that, I will explain. But for now, let's look at how price is reacting to this fair value gap. So they'll be announcing the news in the next 1 minute. Let's see how the news react to price. Seeing that this is the last candle, I'm not sure price will respect this. Not that fully assured that it will respect it to trade lower to run the swing low. But it's still a possibility in price trading aggressively to run it. But now looking at this 5 minute time frame, let's take this fair value gap out. Now the fair value gap is still very, very relevant, but I'm only trying to show you a 5 minute fair value gap here. There's a 5 minute fair value gap. And looking at the 1 minute makes it a high probability setup to anticipate lower prices to run the swing low. Let's just look at how price will be trading. Price traded through the 5 minute fair value gap. Now you'll be looking at price retracing to this fair value gap. I do call this a counter bias. The reason is that a fill on this fair value gap and the lower time frame, which is the 1 minute time frame, would have been on an uptrend. You can see the internal shift, retracement, break lower, internal shift. Now, the 5 minute point of interest will serve, sorry, the 1 minute point of interest will serve as a support if price were to be traced to the 5 minute fair value gap. That is going to be the general idea. Whenever price trades through a fair value gap, I'm looking for the next strong liquidity above that fair value gap. Which looking at this, here's the 5 minute fair value gap. Let's look at how price will be trading to see. Now you can still use up close candle continuation to anticipate more continuation to the draw on liquidity, but a discount price it's still preferable to wait for a discount. But depending on whatever time frame you're trading, you can still look for a run on the previous candle's high as a draw on liquidity. So I think I'm going to go offline. I think um, on the next 5 minutes, I'll be going offline. I think that is all for this lecture. General idea is still aligned that if there is a 5 minutes, sorry, if there's a 15-minute shift in structure, a 15-minute shift in structure, I will be anticipating higher prices. If there's a 15-minute shift in structure, I will be anticipating higher prices and trading higher. But if price were to fill in the 4-hour fair value gap, I will be anticipating lower prices. Now, I wouldn't be taking advantage of the lower prices, but it should be in my trade plan in looking if price will be retracing lower. Still a fair value gap and trading higher. So I think that is it. If I'm not sure I'm going to be saying anything, it's just let's say if price will be retracing, which is currently closing retracing to it, but this should be your point of interest in anticipating higher prices to retrace to the 5 minute fair value gap. Daily bias, higher prices, till it trades to the draw on liquidating. So that is it for this lecture. See you guys in the next lecture.